Mic check, testing, testing. Want to make sure you all can hear me okay. Good morning, Rodrigo. Welcome. I am just making sure that the stream is operating properly. Okay, great. Thank you. Excuse me. So far this morning, we had our high impact news driver, and we've taken out the previous day low from yesterday as well as the day before. We are currently just ranging, and we have our 9:30 open in about 28 minutes. Price tapped the top of the daily fair value gap and seems to have been rejecting up from there. Our midnight open is above us. Take that off because we are done with that. Our 1 hour bullish breaker was disrespected. So let's look at what happened on the daily so far this week. Zoom in a little bit more. So our bearish breaker is still in play. We came back up into this daily bearish fair value gap where we rejected back down, dipped into another one, and now we're continuing down. So overall, our higher time frame daily bias is bearish, but we just tapped the top of this bullish daily fair value gap, and we have another one below that. So currently, price is sitting right in this top area. Now, we've already taken the mean threshold of this when we pushed up. So now it could come and either it's going to bounce off and go back higher, or we're going to go ahead and fill this daily fair value gap and continue lower. This level here and these relative equal lows on the daily, excuse me, these relative equal lows on the daily will serve as the market maker sell model completion and then could continue on further down. So I don't know how many days or weeks it will take for us to do that if that's the case. But in order to stay bearish, we want to disrespect these bullish fair value gaps here and bounce up. And continue down. If we find support here and continue back up to rally up, we'll run into this new daily fair value gap that was created um, on Wednesday. So that's how the daily is looking. On the 1 hour, we still have bearish order flow. This one particular bullish breaker that we created on the way up ran into some resistance here at the daily fair value gap. Now we're coming down. And as you see, we have relative equal lows. So it's not unusual or uncommon to think that we would go ahead and take out the previous week's low, as well as there's another PD array nested right underneath, which is a session low. This is our 15-minute chart. And we had some displacement down, a lot of consolidation and chop. We had a bank holiday yesterday, as well as The overnight session looks like it really didn't do much. The London range is very small, so not it doesn't seem like a lot happened overnight. And now I'm just looking on the one. This is the 5 minute. This was our news driver, and now we're inching back up into the midpoint of this civvy. On the 1 minute, this would be our highest up close candle before the liquidity sweep down, but it is not an institutional high. That would be this up here. So this could see some resistance and continue to drop back down. So overall, our order flow is bearish. And so now we wait to see what's going to happen today. Just as a reminder, this is the second eval. So this will be the first day trading this new eval. And I updated everything on the previous live stream as well as the community post on YouTube. So we're going to give this another try and come in with a fresh set of eyes. We do have a 1 hour fair value gap nestled with the midnight open. I believe that's the 1 hour. I'm going to double check. Sorry about that. One moment. Okay. No, we don't. The 1 hour, that's an old ED array. Doesn't look like we have a 1 hour fair value gap. We'll have one at the close of this candle unless we fill it. But let's mark out the mean threshold of the previous hour's candle to see. We may reach up into that. It looks like price is right about there. So we're right about at the mean threshold of this 1 hour candle that we had during the 8 to 9 o'clock hour. On the 32nd, this would be considered a 30-second bullish breaker here. This is a mitigation block. We have some fair value gaps nestled in there. So we could see a pullback up into the range. Will we make it back up to the London high here? We don't know. At 9:30, we'll have to see what price decides to do. So for those of you all who are joining us, welcome to the live stream. Thank you for being here. I would ask that you would please like the live stream so that others can be made aware that we're going live. Also, subscribe if you haven't subscribed already. And if you are subscribed, I would love it if you would introduce yourself in the chat let me know that you're here. And we are just going to see what price action has for us on today. One thing I do want to look at is our TGIF setup on the daily. Let me move this. On the weekly, I'm sorry. We have to look at our weekly candle. Um, so we had our open, high, low, and close. I want to see if we've already taken 20%. So this would be our 20% level here. Price could retrace into. And this is how I do it. And then this will be our 30% here, which is right by the midnight open price. So it's very possible that we'll reach into that. What am I looking for? I'm sorry. Okay, there we go. What happened to my 30%? Okay, there it is. Let me know if you guys have any questions. Other than that, we'll just watch price and see what happens. Yeah, it's 50% of any range is always important. The higher time frame bias is bearish, but this could be just a pull back into the range. Or, like I said, when we first started the stream, we just hit the top of a bullish daily fair value gap. So price is finding resistance and we could bounce back up. And we may go all the way back up into this daily fair value gap and overtake it and continue higher. Um, as far as daily bias is concerned, for me, I just map out what could potentially happen because price can do whatever it wants to do. I'm not stuck with bias, like I won't take a trade because of this, that, or the other. I really just trade order flow. And currently, our order flow is bearish. So we have 9:30 open, and then we'll have 10 o'clock open. So we'll see where we are with those levels. But currently, we do have a confirmed 30-second bullish breaker here. We just tapped into the mean threshold of the previous hour's candle. So I'll take that off. I like to mark out the midpoint of previous candles. One way to detect order flow is to find out are bullish or bearish PD arrays being respected or disrespected. So let's look at the 5 minute and get a few more candles on the chart. As you see here, price was here all the way up there, and now we've come down, down, down. So when you see that, that lets you know that price is bearish. All the bullish PD arrays that sent price up have now been disrespected. So that's one way to find out if you are on the right side of order flow. And I kind of reviewed that at the start of the stream. So if you just joined us, just rewind a little bit. You have a little time. It's we have 15 minutes until the 9:30 open. But it looks like we're now pulling back into 20 and 30% of our weekly range for the TGIF as well as the midnight open. So at 9:30, maybe we'll have some manipulation back into some of the PD arrays. I want to make sure, where are my fair value gaps? Okay, let's see here. Here we go. So we could hit this level or even this level and reject down to go back up, or we flip on down and continue to the previous week's low. We have a session low below that as well, and some other higher time frame PD arrays down there. So if you were the type that traded mitigation blocks, or if you trade before open, you could have taken, this mitigation block here, entered here, and rolled up to the midnight open. And it's very well possible price may continue on higher. We don't know. You just have to wait and see. But after such a push down, you can always anticipate maybe a slow grind back up. Sometimes it's an immediate rebalance where price comes all the way down and then immediately just shoots back up. But right here, we're getting a lot of back and forth action into the range. And the Discord server is just about finished. Hopefully by next week, we'll have it already completed, and I'll put some helpful videos in there, the videos that really help me understand certain concepts like order flow, daily bias, strategy, and things like that. So I've posted those videos before in certain Discords to help others, and I'll do that in that Discord as well. So some of the things that I like to be aware of is the 9:30 open, because we have to know where our regular trading hours gap is. And today we ended here. So that's our new day opening gap. And so we'll have to see when 9:30 comes how far we are away from that. But that's another potential target. Good morning, Luke. Hi. Yes, welcome and thank you for being here. Okay, so back to what I was saying. The 9:30 open is the you want to set, make sure you're paying attention to that. Next thing I look at after that is the 9:50, 10:10 macro. Macro times have for some sort of manipulation and or it manipulates to get you into a trade sometimes, as well as it can also serve to push the price to the target. So you want to be, excuse me, you want to be aware of those. Then after that, I look at the 10 o'clock open to see what happens at 10 o'clock. Do we create a breaker or reclaim a breaker, or do we create or reclaim a order block? Do we take a higher time frame level of liquidity? You just want to see what happens and how price is respecting the PD arrays that it is running into. And that again leads you back to order flow. And I want to make sure, I think at 10 o'clock we do have, let's see if we have anything else. Yeah, at 10 o'clock we have medium impact news, preliminary consumer sentiment. So it's a medium impact news driver. Not really sure how much impact we will have um, during that time. And then last but not least, you want to make sure that you have your 1050 to 1110 macro. That's our London close macro. And you usually will see some sort of uh, reversal. So if shorts have been making money all day, then you could see a flip in price to start taking out some of those um, sales stops. So those are some of the things I have marked out on my chart. I don't have it here. I'm just trying to keep it as clean as possible. We've already taken the previous day low from the first 2 days, yesterday and the day before. And then we have our previous day high here from Tuesday because Wednesday, no, sorry, from Wednesday because Thursday's high has already been taken as well. Thursday was a half day trading. I'm not afraid of trading the lunch kill zone. I trade order flow. And so time is important because of the manipulation factor, but I don't allow that to keep me from a trade. If anything, I'm just making myself aware of where price could potentially manipulate to. So, like in this case, price at 9:30 could very well manipulate back to this fair value gap, this volume imbalance, even past this low, and then shoot back up. If you're already long, you want to have taken some profit um, because you don't know if we're going to continue lower. The higher time frame bias is bearish on the daily because we have previous week's low here and everything. Now, if we manipulate under this low, we would need to readjust our TGIF levels here for the pullback because we're making a new low on this week's candle. So I hope that makes sense. You guys are asking some really good questions. I like that. So I have been dealing with some sort of virus that's going around, and I've been on antibiotics. I feel a little better today, but it's some days I feel good and great, and then other days it's like comes back. But I'm very nasally and congested sometimes, so please forgive me if I have to keep putting you guys on mute to clear my throat and nasal passages. But I am working through it because that's what we do. We push on. Thank you, Gunna. I appreciate it. I cannot wait till this is over. I've never experienced anything like this before. It's been almost 4 weeks since I've been back and forth, with feeling sick and having to take medicine. I just don't like taking medicine, but I had to go ahead and get some antibiotics. So today is the last day of the treatment, and I'm going to see how I'm feeling over the weekend. And if by Monday, I'm not feeling like 100% myself, I'll go and insist on getting some chest x rays and stuff just to make sure I don't have like pneumonia or something like that. One moment. Okay, so we have about 3 minutes, a little over 3 minutes till the 9:30 open starts, and we're gonna see what price decides to do. If at any time you can't hear or see something, let me know. But since we started the session, or since midnight, Asia high has been taken. London high is still intact, but London's low and Asia's low has been taken. We've taken a series of session lows as well as the previous day low from yesterday and the day before. So we've taken a lot of liquidity to the sell side. This could be our pullback moment into the range. And now we would need to see if we're going to flip bullish and continue higher or lower. After the 8:30 news, we have so far rejected at the top of the daily fair value gap, and we've pulled up about 143 handles, which if you were in that long, congratulations. This is the top of our fair value gap on the daily, and we're about right up in here, 130 handles. We're coming into the TGI Friday that has been created from the weekly candles so far. If we do go past this low, which is the low of the week so far, we would have to readjust those two levels. Are you guys following the ICT 2025 lecture series? And we have 9:30 in about 3 seconds. So let's see what we get. So I watched the first two. He did one last night. I watched that. It was like 20 minutes. So far on the 1 minute, you see we have some bullish order blocks. This is a bullish order block, these series of red candles. This is a bullish order block. So all down close candles, once they have a body confirmed over it, it confirms it as a bullish order block. Price does have the right to come and mitigate that order block. So we could come down here and even to this volume imbalance before pushing up. But if we close below here, now we'll have what I like to call an inter-range breaker block, where we have a low, high, lower low. Sorry, a high, low, higher high, and a lower low. So we're coming back into this area here. This is our previous week low, and there's a session low here. Seems like we're rejecting out of that volume imbalance, but let's give the open a few minutes to show its hand. This is our 30-second bullish breaker. We got some shallow closes above it, but we want to see some more definitive action. This order block has been tapped into, and it looks like the bodies have respected the mean threshold of that order block and now rejecting up. So now these series of down close candles has body close below it. So now this is a bearish order block. So you basically end up bouncing in between different PD arrays. You want to see which ones are being respected and which ones are being disrespected. So far, this is being respected. This bearish order block was tapped into, but nobody's closed inside of it. And so you're just bouncing. And when you don't know or you're not clear or it's not sure, you're not sure about it, you want to give price time to show you what it's want to do. Sometimes we rush into things and then we're not really clear. Now, this here is showing us that we are inside of this fair value gap and we may close that out. I believe, let's see, this is a 9:30 candle, so we can't count that as our first presented. It has to be the first one after 9:30. So if we create a fair value gap as we're going up, that will be our first presented. But right now we have lots of wick price action. The candles, the charts have been very wicky since the beginning of the year. Not really sure why, but lots of wicks, lots of not many, like all this here, just maybe time distortion, just holding price around until the open. But so far, 9:30 open only mitigated this fair value gap. We didn't even touch the volume imbalance yet, but this could be just us ranging. We've taken a lot of sell side liquidity and now we're just ranging. So we need some displacement either to the upside or the downside to let us know what we want to do. I'm going to grab a sip of water. I'll be right back. pulling back. So at 9:30 so far, we are just consolidating. I'm not interested in anything until we break out of either this range or let's see, the 30-second look like. Yeah, this bullish break on the 30-second, it's very shallow, little bodies over it. That's not displacement for me. I need to see some definitive action. If we get above the top of this range, we could potentially go up into the new day opening gap. We have a session high above that, which was London, and then some previous session highs all the way up to the previous day high. So I don't like trading in the middle of ranges because price could go either way. You can formulate a trade either way. But back to the order flow, we are bearish. The 613, we took the London high, and on the 1 minute, we created a bearish breaker here. On the 5 minute, let me see so you can see a little better. This was our bearish breaker. We confirmed it, reclaimed it, and that was your short. So if I was at my chart before 8:30, I could have taken that breaker entry down here for over 260 handles. It looks like we're going lower. So that's how we're mapping out the order flow for today. And this is what I want to see. If we take this low, I'll have to readjust the um, 20 and 30% fib. Morning, Robin. Hi. Thanks for stopping by. Have a great day. And for those of you all who are joining us, if you would be so kind as to subscribe and like the live stream, also share with others if you finding value. Thanks for hanging out with us today. And thanks to all the new subscribers. I appreciate each and every last one of you guys. Yes, it looks like this would be our first one. So we have a bearish order block that was confirmed after 9:30. We have this one and this one. And then we have our low. So depending on what type of trader you are, if you if you're more of a short-term scalper or you just, say for instance when this order block was confirmed here, you could have gotten short inside of that to come down, or you could wait to after this one was confirmed and any up close candle will send you down, targeting the low. Those, I think that's more for aggressive traders or who have more experience doing that. Our first presented fair value gap, we tapped the edge of it and now we're heading down. We also have our 950 to 1010 macro in about 9 minutes. back into that first presented fair value gap. Looks like we're rejecting out of it. But if we don't take this low, then we can see price go on up and really tap into our TGIF levels that we have set up. Also set reminders a few minutes before the new candle open, just to check the 1 hour chart to see what we're doing on the 1 hour, as well as to find out the mean threshold of everything. Hold on one second, please. I'm back. Okay, so we rejected out the mean threshold of that um, bearish fair value gap. Looks like we're heading toward our lows. Good morning, Chris. Welcome. Thank you for stopping by. And as you are entering the room, if you could be so kind as to like the live stream, share it with others, and also subscribe if you're not already subscribed. Happy Friday. This is the last trading day of this week. So I hope the charts have been treating you well. The market, shall I say. Hmm. So I want to see if we close outside of this first presented fair value gap, use it as resistance, and continue higher into our TGIF levels, the midnight open price, as well as the new day opening gap. This again is London high. So we did close outside of the first presented, but we're going to keep it on the chart so we can see if it's now being used as resistance. And we have 4 minutes until the 9:50 to 10:10 macro. So far after 8:30, we came down, we tapped the high of a daily bullish fair value gap. We rejected up into mean threshold or equilibrium or 50% midpoint, whatever you want to call it, of the New York open range from 8 o'clock until the current time. And now we seem to be rejecting from that level. We had a high, low, higher, high, lower, low. This is our inner range breaker block. So that's what happened after 9:30. It was a nice short setup if you were sure we were going to go ahead and continue down. We also closed out the first presented fair value gap, but rejected out of that. So our next targets will be previous week's low and a session low below that. Order flow remains bearish. So now that we've taken this low, this will be our new 1 minute bullish breaker if we get above that level. On the 5 minute, that level will be here. As far as institutional swing points are concerned. As we continue to make more lows, you would need to readjust that level. And we're now in the 950 macro. Because we do have such a higher time frame pull, like the previous day low, I would love to see this level here taken and then um, we reject up. It's really tricky around here, but this is our bearish order block here. We've confirmed it. Price could manipulate up into this area to continue down. If we flip this bearish order block, it becomes a bullish breaker, and then we will be looking for higher prices. Excuse me. So far, it looks like we are going to take this level. Hmm. So if you're bearish and you're um, looking for entries, if you want to go lower, you want to get in as prices pulling back up into those order blocks. We've already confirmed a 5 minute and 1 minute bearish breaker to the downside. So order flow is bearish. It doesn't flip to bullish until we confirm bullish breakers to the upside and start disrespecting the bearish PD arrays that formed on the left side of the market maker sell model. So part of my trading plan is I trade order flow. I watch price action. I trade order flow. Breaker blocks are my favorite entry model for reversals and order block entries for continuation trades. So I find where was the last breaker confirmed, which direction, and I trade in that direction until um, an opposing breaker is formed. So far on the 1 minute, we did not get a bullish breaker. This is not an institutional swing point, although it is the highest closed candle. It's not high probability. As you can see, we just chopped around, barely closing above this level, and then we rejected down. So following order flow, following the breakers is how I like to track price. My assumption that we were going to go ahead and take the TGIF would have been wrong if I was already long. And I would have had to cut the trade once we created this breaker in the middle of the range. So that's another reason why you want to give price a time to um, manipulate or show its hand so that you really get in on the real moves. For me, after we take this level and we create a breaker block to the upside, that would be more higher probability for me. I'm also watching what ES is doing as well as the dollar. And ES is also coming to the same levels as NQ. The dollar is just basically dollar is heading to the mid. It's right in the equilibrium of the New York open session range. So if it starts to push up, that could potentially push the indices down. But if it flips down, then that means we're going to go back up. So we're basically just kind of letting price do what it needs to do. So now I want to look at the 1 hour candle that I want to look at this 1 hour candle, and I want to start mapping out the mean threshold of this candle to see where we could potentially pull back into the range if we're going to do that. We notice time and time again that the previous hour candle, the mean threshold is revisited. So for us, at 10 o'clock, this would be the mean threshold of the 9 to 10 o'clock candle. This will be our confirmed bullish breaker if, in fact, we do close above that. And we'll get a nice close above the first presented. You will want to see it used as resistance to go higher. But I really want us to go ahead and sweep this level first. And now we have our 10 o'clock open. Previous week low has been taken. And our new 1 minute bullish breaker will be here if we close above that. On the 5 minute, I would use this institutional swing point. We're taking a session low. And after that, we are coming back into the consequent encroachment of that daily fair value gap here. So we are pretty bearish. Congratulations to those of you all who are already short. If you're in a short right now, we had a really nice move down from after 8:30. Right at the 9:31 level is a low of a daily candle right here. And then after that, we have the mean threshold. So we're digging in pretty nicely into this bullish daily fair value gap. We've already taken the mean threshold of the uh, fair value gap back on what day was that? November 15th. we've been wicking inside of it, and we have bodies that are closed. So we have a daily volume imbalance around the 590 area, and then the low of the fair value gap at 617. Then we have another daily fair value gap right here at 522. So lots of things. We have a new week opening gap here. This is the top, mean threshold, and the bottom. Let me make sure you guys can see the screen. So if this is going to be a trending day to the downside, your best entries short are going to be inside of those bearish order blocks. So this confirmed a bearish order block. If we confirm or, come into this area and start to reject out of it, that would be a good short. I would prefer us to overtake this, turn this bearish order block into a bullish breaker and go higher for some sort of pullback, but we may not get that if we're really heavy on the day. And just looking at our 1 hour chart, as you can see, we've had a sell off the past 3 hours. We've completed the market maker sell model on the 1 hour chart. So we could see some sort of retracement back up into this new 1 hour fair value gap that we created. So that's our higher time frame bias. Oh, another thing I want to do, let's look at our regular trading hour gap and see how many handles, because that's something that ICT's been talking about. So let's see how many handles have we. It's like 159. So let's see. I think he said if it was more than 120 handles, price may not return to that level because it's heavy. It's in a hurry to get where it's going. Correct me if I'm wrong, but I think it was 120. So if that's the case, we may not see any movement back up into this area. It's quite possible. And I think you're also supposed to use your fib. So let's do that too. Trying to use our, I don't know which fib it is, but anyway, it's from here to here to get our projections. Yeah. Okay. So because we are below the midnight open, um, longs that would be favorable, but we are short. I'm sorry, we are bearish. So nothing in price has told us that we're going higher just yet. If anything, we continue to confirm bearish order blocks. We are reaching into those order blocks and we are coming down. This will be our new 1 minute bullish breaker. And this will be our new 5-minute bullish breaker. As price continues to make lower lows or take out the previous low, you have to readjust your breaker um, levels. And it looks like we're coming back into the consequent encroachment of this daily fair value gap. Now, we've painted that fair value gap several times over the past couple of months, but we have not closed it out. And then we have another one low. So, in 10 seconds, our 9:50 to 10:10 macro will be over. So now was that macro our manipulation down to start some sort of pullback? Or who knows? Maybe we continue going lower. I'll check the 1-hour candle in a couple of minutes. Well, toward the end of this hour. So what are you guys' trading model? Like, what style do you use? What are some of your rules that you have in place for trading? Do you have a model? Do you have a trading strategy? I reviewed mine and it's also in the description of this live stream, but I'll be interested to know if you guys have something different. How do you trade? Are you in a trade now? Are you short? Are you waiting for a reversal to go long? Y'all talk to me. Okay, Chris, you said you're trying to refine your breaker block trading strategy, but it is a work in progress. Yes. So identifying the breakers will be the first part, and then identifying the highest probability breakers will be your next key. Because one thing you have to understand is every breaker is not high probability, you know. So you had a high, low, or low, high, lower, low, higher, high. If you would have taken this breaker just off of that pattern, you can't trade patterns, but you would have got about right here to the top of this fair value gap, and then price would have dumped down on you. So knowing order flow is the main thing. Knowing if you're just consolidating is another thing. You want your breakers to be at institutional swing points. Now, I'm going to zoom into this just to show you. This is a swing point. These candles are high. We have a swing point here. So I could definitely use this as a breaker. However, these candles here are all in line with each other. I don't want to use this candle as my breaker. I would prefer it up here. Technically, I will have more confidence if it's up here, but that's around the 5 minute one. So we should be good anyway, either way. A lot of times I will drop down to the 30-second or other sub 1 minute time frames to see, excuse me, if we have a swing point like this here. This would be a 5 second bullish breaker. If we was getting displacement through it, I would make 15 second. I would like that. And I have taken some sub 1 minute ones before, but you're not sure how far it will go. So on the 5 second chart, we have this bullish breaker here. It's delivered 60 ticks or 15 handles, but are we going to continue higher? Not really sure. But we did do what I would like to see, which is us take that previous week's low, create a 1 minute breaker. And then if we get, excuse me, guys, one moment. So sorry about that, guys. I am really struggling. Um, so I would like to see us get above that. Above this level now we have bullish order block, inversion fair value gap, bullish breaker. Those are three PD arrays that gives us more confidence that price wants to go higher. And this is all again after sweeping the previous week's low. But if we don't get that and we continue to make lower lows, our order flow remains bearish. So Chris, back testing and forward testing and demo will help you really hone in on that skill and confidence to know what breakers are going to work or should work and give you that confidence to go ahead and take the trade. A lot of things can work. A lot of strategies can work sometime. Everything works sometime, but will it work all the time or is it high probability? Something that you'll only find out from doing your back testing and reviewing price action. So far, we come back into this bearish order block, this fair value gap. If we get above this breaker, I'm mapping out to see how much my stop loss would need to be, because it would need to be above this low, or at least these candles, unless we create some fair value gaps that I could use. I try to use the 3 PD array rule. So we have a bullish order block, at the close of this candle. Actually, I would like to see, well, no, we have a bullish order block here. We're going to invert this fair value gap, which we just did. So that was the second PD array that was disrespected. And then if we get a close above these two bullish candles, that will be our bullish order block. I'm sorry, our bearish breaker. So we would need to get below this to be disrespected. I'm just putting my position tool on to see um, where we would be going. Always shoot for 50 handles first, then 75 handles, and then I target the mean threshold or the highs of the session. So I just let it run until we can't do anything else. And I'm not sure if you all know this, but the position tool on the side, now you can put in how many, micros you may want to use, and it can let you know. So my stop loss would need to be around here. It can't be because that's too much. No trade can be more than $400. Can't risk more than $400. So my stop loss would need to be here. So that's why I only have 3 micros on. Now, if I want to put it just beneath this volume imbalance, that would be that would allow me to use maybe 4 contracts. So you want to map out your risk prior, because failure to do so could prove to be disastrous for your account. I also want to see us close and create a fair value gap. We are not getting any fair value gaps in this area. We do have a volume imbalance. And I want to see if price is respecting this order block, this bearish order block. Now, price can definitely come back into this volume imbalance, but we're not getting any decisive close above this level here. So you want to watch that a little closer. And then we have this order block, this bearish order block here that you want to draw your attention to, because price can come into that and reject, or if we close out of it, we could continue higher. So just make sure you're watching your order blocks. I'm able to now see them. I don't have to draw them out, but in the beginning, when I was not familiar with doing that, I did. I had all that stuff on my screen. I still have a lot of stuff on the screen I'm looking at on my end, but for you guys, I try to keep it as clean as possible. So on the close of this candle, if we close above this level, that will confirm a 1-minute bullish breaker. This is an order block. It will confirm an order block, a bullish order block here and here. I wouldn't want price to come past this volume imbalance. So I'm gonna set a limit for 4 contracts to go long here. A stop loss will be here below this volume imbalance. If we get tagged in, time is it? It is 10:24. We may not get a fill. Could come into this bullish order block here. So my entry is at the top of this bullish order block. It's the equilibrium of our range. Um, News events really just push price to the market makers' intended targets anyway. So if you are familiar with order flow and where price is going to go anyway, it just gives you a good entry. But you do want to kind of let that manipulation play out, and then you can jump on board if you're experienced with that. So we're not getting deep pullbacks into our zones. Um, yeah, I didn't get a feel. I want to see price come into this order block or at least this fair value gap. That could run off without us, which sucks. Typically, I will enter right after the confirmation. Sometimes I'll do that and then I'll add to it if it does come back in this area. But at this point, I wouldn't want to see price come past this level here. Were to get in here. Oh my God. What am I doing? I did not try to. I did do that. I'm thinking I still had the position tool on. Okay, let me see where we at. And so 200. I accidentally put myself into this trade. What was I thinking? But it's okay. I'm managing the risk. So fingers crossed this doesn't bite us in the behind. I have to readjust my loss position thing here. And then remember we have our 5 minute bullish breaker here. This is the silver bullet hour. So um this is the equilibrium of our New York session range. And then lots of we have lots of upside targets if we're going to continue higher. And the only thing of concern for me is that we could manipulate down into this volume imbalance, which would stop me out. But we have a bullish order block here, bullish order block there, fair value gap here. So those are our three PD arrays that would need to be disrespected. And that's where my stop loss is. I follow a three PD array um, stop loss, to protect yourself. And let me make sure that my position tool is in the correct space. So this here should be my 250 handles, right around there. So news serves as drivers, Chris. It's supposed to actually drive price to the intended targets on the higher time frame. Market makers are only concerned with the daily, weekly, and monthly levels. Um, but we can find good entries off and formulate trades off of the 1 hour as well as we can get entries on our 1 minute and sub 1 minute, even 15 minute. But your higher time frame targets would be the 1 hour and above. More specifically, your daily and above for big moves. This is our new account, so this is our first trade on this eval. I failed the other one. It had like $69, so it's like, okay, I'm not gonna worry about it. I'll just start this new one. So today is the first day of our second eval account. Now we've come into this order block, this bearish order block. We haven't gotten any bodies to close above it yet, but we do have a 1 minute bullish breaker. We have not confirmed a 5 minute bullish breaker just yet. So we want to see this bearish order block be disrespected. No, the previous account has failed. All right, so we've taken profit here. Let me adjust this. We have two more contracts on as runners. I'll let it breathe. Um, because price could come back into this, but I doubt it will. It shouldn't. Let's see, where's my 100 ticks at? 25 handles. It'll be right here. So I'll put stop and keep it there. Actually, I want to, and so this is the part that I deal with. Once I've taken profit, I don't want to give any of the profits back, but I don't want to choke it out and then we continue higher. So far, we are closing in on that bearish order block. Yeah, with this account, you have $1,200 per day. Well, we confirmed another bullish order block to the upside. You want to see us create this propulsion block and continue higher. We've taken external range liquidity, so on a higher time frame, our next target should be internal range liquidity, which is this 1 hour fair value gap. I'm going to move my stop right before entry just to cover any fees. Um, I feel like I'm choking it a little bit, but I can always get a better entry if we confirm that we're going to overtake this bearish order block, which again, bearish order blocks, once they are disrespected, become bullish breakers. You have a high, a low, high, lower low, higher high, as well as this would be our 5 minute bullish breaker here. If we are confirm it, that should propel us higher. We can even go up to the London highs. This is the session range of the New York Open from 8 o'clock until the current price. This is the midpoint. So price could see some sort of rejection. And let's look at the time. Uh, our next macro is at 10:50. I'm targeting 500. I'm targeting 125 handles on this runner, and then the final runner. I'm targeting 230 handles. Now, we just need a close above to create a 5 minute um, bullish breaker. With the close of this candle, we'll confirm another bullish order block. And then on the 5 minute, I'm going to be watching on a separate chart to see once we get a close above that. We have about less than 2 minutes to confirm it. These things are in a way that, let's see, that's better. I can actually see now. Oh, I want to see us disrespect this 15-minute bearish fair value gap. We have some more above us coming up into the session EQ. So this order block is confirmed. You want to see price tap the top of it and continue to go higher. This is our silver bullet hour. So we're in a market maker sell model down here. We flip. You could hit the top of this to be our market maker buy model. These relative equal highs and then all the way up to the top. So we're just going to let price do what it do. So my stop is at a 3 PD array level. If we came here, that means we've disrespected bullish order block, inverted a bullish fair value gap, volume imbalance, and another bullish order block. So really it's 4. Our next target is 100 handles. On the 5 minute, let's look and see. That last candle did not put a body over it. So we have about another 3.5 minutes to confirm. And the EQ of this session is also at the midpoint of the range. We have disrespected this order block here. We did get a body over that. Excuse me, but we are not, we're still inside of this bearish fair value gap. Our 1050 to the 1110 macro starts in about 6 minutes. So we want to see price go ahead and push up. You come back into this bullish order block and you want to see that be respected. created a bearish fair value gap on a 1 minute, so I want to see that get disrespected. So during the macro time, we could very well manipulate down to go back up. Either way, I'll take some profit, and if I have to, I'll get a better entry or just take what I have and be okay with it. We're creating a low, which is something I want to see that shows some resistance inside of here to go higher. You always want to pay yourself something, you're going through all this analysis and waiting. It'll be a shame to not pay yourself. So we have one TP hit already at 50 handles, and our stop loss and profit is at 100 ticks, which I believe is 25 handles. Our second target is at 100 handles here. So the close of this will confirm another. If we close above this, we'll confirm another bullish order block. When our second TP has been hit, then I'm going to move my take profit into this level here, where my original TP was, and that will secure our. It should secure our $500 for the day. We're in that first. Excuse me, guys. I'm so sorry. My voice is cracking. We're in our first presented fair value gap, and we just came into the mean threshold of previous hour's candle. So we could see rejection out of this area. Let's look at the 5 minute. We have a minute and a half before we confirm a 5 minute bullish breaker. So if you are the type that only trades after confirmation of a 5 minute bullish breaker, then you would want to start positioning your tool in that area. Now, We want to look at where we are as it relates to the market maker buy or sell model. Okay. At 8 o'clock, we started at 322. Where's it? Oh, right here. Okay. So from here to here, we've now retraced and closed over 50% of the range. We're hitting the golden zone, which, some people knows that that is OTE entry if you're trading that style, and that could reject price down. But if we close above it, as well as the 75%, it's high probability we'll go ahead and take out the high of the range. I'm going to zoom back in for you guys. This is a bullish order block. Price can come down to the mean threshold of that and continue higher. We are in the 1050 macro, which is our manipulation time. But my take profit, stop and profit is at 50 handles. So we'll secure another $100. So if we invert that fair value gap and this order block and this fair value gap, that will be the three PD arrays. If we close above this level, that'll be a high, low, higher, high, lower, low. That's a 1 minute bearish breaker that occurs inside the range. I call it an inter-range breaker block. So I really want to see price reject back up on the 5 minutes. We did get a close above to make that bullish breaker, and we're back inside of a 15-minute bearish fair value gap. It's right here. Sorry. So we tapped into the middle, but we've already tapped it before. So price may want a steeper, what do you call that? Pullback. Okay. So stopped in profit, and it's very likely that we can continue higher, but I want to make sure. Let's see if we could have closed below this level here, then that means that the macro wants to manipulate down, possibly into this entry or back into the 1 minute bullish breaker that sent us up. So that's our P&L for today on this account. And we had two targets hit. Well, three. This one here, well, let me take that order off before I get filled. So now we disrespected this bullish order block. Close below this will be another disrespect as well as this. The price is probably just coming back to the 1 minute bullish breaker to give those who are more patient a entry. We did get a close above on the 5 minute. However, it was not, um, the candle was kind of small And I also want to point this out. One other thing that I monitor is the 5-minute order blocks, because as you can see here, we have a bullish order block here. The mean threshold is right here where the 1-minute bullish breaker was confirmed. So price has the right to come all the way back here just to push up. So you always want to keep tracking price in that order flow. That's how you track order flow, uh, order blocks and breakers, volume imbalances. But now we go higher, looks like. For those of you all who have just joined or you've been here, but you may have forgotten, if you could please like the live stream, subscribe and share. I would love for you to come on the chat and introduce yourself or let me know that you're here. And if you have any questions, I'm more than happy to answer those for you. We rejected out of that first fair value gap. As you can see, nobody's closed above that consequent encroachment. Since we've created a interrange breaker block, high, low, higher, high, low, low, and we have a series of bearish fair value gaps. Keep in mind that the higher time frame order flow is still bearish. This is a 15-minute bearish order block. We tapped into it in the last 15 minutes, and that could propel price back down to the consequent encroachment of the daily fair value gap. And then we have a new week opening gap. This is the top, the middle, and the bottom. And then we have several below us. So on the higher time frame, you got bearish, but we did take advantage of this minor pullback into higher time frame key level. So we met our goal for today of just trying to secure at least about $500. We with after fees, we have 491. So not bad for a Friday. And then also we have not. This is what I need to do on the weekly. I need to readjust our TGIF levels because we did go lower on the week. So let's see where those levels are now. Sorry, hitting the wrong thing. All right, so now our 20% is here and our 30% is, did I do that wrong? I probably did that wrong. But our 30% is right around the previous day high. So wait, open high, low close. So I did it. Yeah, I did it right. Think. Did I do that right? One moment. Let me do it again. So this is a bearish candle. We opened here. So from here to here. Okay. Our 20% is here. And our 30%, doing something wrong here. It's here. Okay. Let me take this off. And I have to go back and readjust some of these levels that I moved around by mistake. I'm gonna take you guys back to the 1 minute and I'll get the chart. Oh, okay. So we're almost coming up to another hour. I want to do that too. Now we gotta see if price wants to retrace to the mean threshold of this hour's candle. So after 11, price it looks like it's going to already be in that area. Okay. So we have hit our 20% TGIF, 30% would be up here. I still believe that we're going to go for internal range liquidity on the higher time frame on the 1 hour. Also on the 1 hour, we hit the minus 2.5. We were very close to the -3 standard deviation. -4 would be at the mean threshold of the new week opening gap down here. So because we are bearish, I can't say for sure that we will tap this 1 hour, I'm sorry, this 1 minute bullish breaker and continue higher. I'm not liking that we created a bearish breaker block to the downside, but that's just could be manipulation during a macro to go higher. So we have another 10 minutes in the macro. It is now 11 o'clock, and I'll be staying on till 11:30. Hopefully, we'll see some action. Sorry, we'll be seeing some action by then. Again, price can definitely manipulate into this volume imbalance on the 5 minute. This is the mean threshold of a 5 minute bullish order block. So that's how you want to look at price. Currently, we are at the mean threshold of that order block. Nobody has closed below it. But there is an unmitigated 5 minute bullish fair value gap on the 5 minute chart that has not been tapped into. So if you look at the 5 minute chart, I'll go over that real quick. You can see that order flow is still very much bearish. We did not get a body close. We got a body close over this 5 minute bullish breaker, but we closed right back into the range. And so that's a key that price doesn't really want to go any higher. We couldn't even push up into this 15-minute fair value gap. We tapped it and that was it. Came down and we couldn't get any higher. So big possibility we're going to just continue to go lower. We were able to catch a retracement back into the range and then hit our TGIF. Now, for those of you all who are going to trade later, um, if you if we go past this level here, you would need to go back to the weekly chart to readjust your TGIF pullback levels because you'll be making a new weekly low. Are there any questions at this time? Comments, concerns, anything you want me to review? We have another 28 minutes. I want to thank you all again for tuning in. Don't be shy. We talk about a lot of stuff here, so don't be afraid to ask questions or comments, or if you have a different trading style or you see something different. Um, we're a community that we can all talk about it. Everyone doesn't trade ICT, but ICT is just what resonates with me, and it took some time to get here. So price is still respecting this 5 minute bullish order block so far. I'll bring the chart in a little bit closer for you guys. And it looks like right at 11 o'clock, we were at the mean threshold of the previous hour's candle. So I'll take that off as well. So we've made another bearish order block, tapped into it, came down, created more bearish order blocks. And as the price closes below this bullish candle, that will be another bearish order block. And KTH Con, that is how you track order flow. I have a video. I don't know if you're in any discords with me, but if you are, if you send me a message, I can send you some good information about that, how to track order flow. So we're back at this 1 minute bullish breaker. We have this volume imbalance. Really, after that, I believe that's going to be the line in the sand for any upward movement. I don't particularly like deep retracements like this. And that's why you put your stop loss at a 3 failed PD array. That means if price disrespects 3 consecutive PD arrays, you cut your losses and find a better entry because price has the right to come down to this level. And you don't want all of your, if you had 150 handles to the upside, you don't want to see it get eaten all the way back up like that. Because this is 175 handles now that we've retraced. So that's how you preserve your capital and you um, track your price areas. You want to always know where price can go to for your take profits, and you want to know where price can reverse and mitigate imbalances so that you can get out or get a better entry. Did any of you all take the long off the 1 minute unicorn? The TGI Friday has been hit for the 20% retracement. And if you are watching and you have not done so already, I would love it if you would give the stream a like, if you would subscribe, and also let me know you're here. I don't wanna feel like I'm just talking to myself. However, I don't have to talk. We can just watch price at 11:30. I will be signing out, but I am, available to answer any questions, that you may have. I hope you had a, prosperous Friday trading session. Hi, good morning, Jan. Thank you so much. Appreciate you tuning in, and it is my absolute pleasure. Hopefully next week I will be feeling a lot better and my voice will be better. So the macro is over. We have about 20 more minutes before we end the stream. So looking at the 15-minute, we created a bearish breaker, came back up into this fair value gap, rejected down, tapped into the first presented fair value gap, and now we're going lower. The next target will be the consequent encroachment of this daily fair value gap, which we've already um, hit several times before in previous weeks. This is a zone or area that sent price up. So now we have the bottom of it, and we have some new week opening gaps here and another daily fair value gap. So price could really just come all the way down here to complete the market maker sell model on the daily. And then we have all these lows down here. So what was the purpose of us creating that 1 minute bullish breaker? Take us up into this 15-minute inefficiency, back into the first presented fair value gap, and then we reject it down. We could not get a close above the golden zone or the OTE, and that's one of ICT's trading concepts. Is you take the range, the range of the session, and you set your limit for the 0.62 zone, and you trade in the direction of the higher time frame order flow. I'll put the fib back on so you can see what I'm talking about. So 8 o'clock, we were here. Price hit the 0.62 tick, and we have rejected down. So those persons who trade that model, you've made over 215 handles if you set your limit there. So you can always formulate a trade, bullish or bearish, long or short, depending on your understanding of price action and what it's doing. Again, our opening gap, range gap was over 120 handles. And as ICT said, when that happens, price does not have to come up there at all. Lou, you've been busy trading. How much trading are you doing? Are you like a micro scalper? Do you take like different price legs and moves like that? I'm gonna go ahead and get these screenshots for my journal. Okay, yeah, that makes sense. Like I tell people, you have to trade what makes sense to you, what um, resonates with you, and all of that. Okay, Luke, yeah, that makes sense. Um, so coming into the session, I knew that the order flow was bearish. We had confirmed 1 and 5 minute and 15-minute bearish breaker blocks. But the higher time frame drawn liquidity from the daily to the monthly was the previous week's low. So I knew that, and knowing that you can take any order block. But we had news and we did have a retracement. We just basically retraced back into the mean threshold of this inefficiency, and then we came tumbling back down. Progressive entries, I could have taken that, but I wanted to wait for something a little bit more sure, more clear. And so I took this 1 minute unicorn into the mid range, hoping that it would go higher back into the 30% of our TGIF and into internal range liquidity. But we hit the golden zone of the opening range, um, and we rejected down. Now, we may not take this low. This could just be the pullback we needed because, again, on the 5 minute, we are inside of a 5 minute bullish order block, and the bodies are respecting the mean threshold of it so far. So, what will price do? We don't know. That's for time to tell us because, again, we know that time is more important than price. But if we do go below this low, you want to readjust your TGIF levels because it could play out in the PM session as well. I just want to say we have 14 people watching and we have 13 likes, and I really appreciate each and every person who has come, like the live stream. Um, this is a journey and it's not easy, especially doing it in front of people. Um, but I'm getting used to it and we're just going to see how this works. Uh, if you hadn't had a chance already, check out the community tab on this YouTube page where I explain the adjustments that I'm making for this particular account so that we don't blow it. Um, I can't trade the way I normally trade with my personal account. I didn't start trading with prop firms. I started with personal funds, so that's more of what I'm used to. But I do see the value in prop firms because it's cheaper and you can get many of them at a time. And, it has its ups and downs, but there's a lot of restrictions. And if your trading style sometimes does not allow you to go into deeper drawdown, or if you've had a series of losses and your account is in the negative, um, that drawdown only the restrictions throughout the day can hinder you. So I'm just tightening that up, and so far it's working. Yes, Luke, go ahead with your question. If there are any other questions, please put them in the chat now. We have about 5 more minutes. Okay, so with $352, you have about one trade, and that trade can be no more than I wouldn't put it depends on where your stop loss would need to be in order for you to not lose a trade. So let's take this for example. Say you were going to take a long, right? You have this bullish order block, you have this fair value gap that if it's inverted, it um, would be insignificant. So you have about 300 ticks worth of that your stop loss will need to be around here to be in a safe place, right? That means with only 300, or if you just want to really go balls to the wall, say 350 ticks, which is 87 handles, right? If you were to enter here, the price is currently at, this will be where your stop loss would need to be. You could use no more than 2 micros, and you would want to target a 1-to-1. So that would give you the mean threshold. So you would probably walk away with $350. So now, if you win that trade, that means you have now 600 or almost $700 that you could use. With that logic, now you can take two 300 stop loss trades, meaning 2 trades with no more than 300 in stop loss, 2 micros each. You can build that up to another $300. Now you have $900, so forth and so on. But you would have to take A plus setups that you recognize and know that are high probability to deliver. And that's how you would dig yourself out of the hole. So what you don't want to do is you want high probability scalping, micro scalping. It's more risky because you have all this pullback. And as you can see, we're painting back and forth. We're barely making any fair value gaps. You know, we're just chopping around. So when you see conditions like this, lots of heavy wicks, no real displacement. We got displacement here. displacement here. That's it. Everything else is chop, 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 chop. When you see that, these are low probability conditions. You don't want to push too hard. That's what I did. I had gotten drawdown. I was trying to, get the money back, and I would have winners, and then I wouldn't be satisfied with that, so I would keep pushing, and I pushed myself right out of that account. When you're in drawdown, you have to become more selective in what you take. When you are in the green and you have a surplus, you can manage to maybe take a few riskier trades, maybe B minus or B plus trades. Um, but when you're in heavy drawdown, you need those A plus setups. You need those setups that really make sense and that repeat over and over every day. So before we go, I just want to review what happened and what I look for. So we had 8:30 news. Um, this would have been when someone asks about the news, do I let that influence me? What I've noticed with news, it really just pushes price to its targets. We had some sell side liquidity targets down here. We already had a bearish breaker confirmed. Okay. So at news, price just really manipulated above into this fair value gap. That's a good short entry. Boom. Then we retrace back up, the midpoint of that inefficiency, and we took out the previous week's low. That was my target. But I knew the daily target was the previous week's low. I could have gotten in. I would have had to, take some drawdown, but I could have held. I don't engage price until after 9:30. At 9:30, we confirmed a bearish order block, high, low, higher, high, lower, low. Price tapped into it, came down. At 10 o'clock, what did we do? 10 o'clock, we confirmed another bearish order block, tapped into it. And if you didn't get anything but this part of that move down, that was 85 handles. Okay. Then after 10 o'clock, we created a bullish breaker. The fair value gap aligned. That was our unicorn. That's the trade that I took up into the first presented fair value gap. And you have key times, including the macro. You want to see what did we do during this macro? What did we do? Right at 10:57, tap into this bearish order block. This is a short into the previous week's low. Now, I didn't want to do that because continuation trades are like B plus trades for me. I am not as familiar with them. I'm getting very much more comfortable. Yes, the unicorn repeats every day. Um, I'm getting more comfortable taking continuation trades, but I like low risk buys and sell. That means I like to get in when price is just making its first flip. We were bullish. We took uh, Asia high. We made a bearish breaker. This is my optimal entry. I like to be in this area because now I'm confident that price is going down. When you're in the middle of a range, price could just do that, balance the middle of that range and reject and go back higher. So it becomes more risky. And in those cases, when you are taking riskier trades, you want to reduce that risk in case you are wrong. Because price can do whatever it wants to do. Although the previous week low was still in play, doesn't mean it had to be taken today. Although I was pretty sure it would, and I wanted that. But I said, I want to see that level taken, create a bullish breaker, and then I'll take that pullback and or reversal. Price showed us that it did not want to continue higher after we reached the golden zone, which is the 62% of the opening range. We rejected back down, and now we're just consolidating. Now, price may hold until this afternoon for the PM silver bullet or whatever, but I've met my goal for the day and I'm going to call it a day because you don't want to press too hard and low resistance liquidity runs. But yes, a trade can be formed every day. A breaker is formed every day, whether it's a unicorn, meaning it's a fair value gap aligned with it or not. It doesn't matter. I don't require a fair value gap, um, but they're nice to have. I could have went long as soon as we closed above this 1 minute bullish breaker. I could have went long here, but I waited for price to come back into that fair value gap. I actually got in on accident. I was really waiting for it to tap the line here, but it didn't do it to here. So had I waited, I would have missed that move. And sometimes you're going to miss the move. But because I back test this a lot and I see it a lot, my reticular activating system is activated when I see those things. And I took that long. Managing my risk, 3 PD array rule. It If it disrespects the fair value gap, the bullish order block, and this bullish order block, my stop loss was here. So I was risking $400 to make $500, which is a little off, but my I could have made a lot more. I just split up my micros because I was hoping we would go higher. And if my stop loss was a little less, I could use more micros. And the more micros I can use, quicker I can get to my $500 target and then have runners to give us a little extra. Okay, guys, it is after 11:30. I am going to start wrapping up the stream here. I want to thank you all so much for tuning in. I hope that this was informative and insightful. And I'll be back on Monday for this account. I don't know if I'll trade the PM. I probably won't because I'm starting to feel like I need to take some more medicine. So I think I'm just going to rest for the rest of the day. Um, and I hope you all have a great weekend. Thank you again for tuning in. I will be back on Monday, pick up day 2. So today was a win, and we are grateful. We're going to be content with enough, and we're going to go and enjoy the rest of our weekend. But if you are going to continue to trade, be careful, safe trading. Thank you for joining me today. Tell your friends, bring your people, and let's do this again on Monday. All right. Anybody else have anything you want to add in the chat before we go? If not, I appreciate you all and have a great weekend.